what we're going to do today here is I'm going to ask Trevor just a few quick questions. Then Kevin Bell, our partner in charge of our tax department, is going to give us a quick tax update as far as what's going on in the legislative world. And then Trevor is going to talk through some fraud discussions. He's got a great presentation prepared, so I'm really excited for it. So Trevor, 3 quick get-to-know-you questions. We're looking for favorite cheese, favorite beverage, and if you weren't doing your dream job already, which is being an accountant, what would your dream job be?
All right. Well, the cheese is that's a softball. Brent told me he was going to set me up with some questions. I was a cheese maker at one point and worked for the Rogue Creamery. And so I would be, I think I'm still contractually required to say that the Rogue River Blue is my favorite cheese, which puts me in good company because I was voted the best cheese in the world 2 years ago. So that would be up. That'd be my favorite cheese. Favorite beverage, generically. You think I'm going to say beer, but I just took a trip to Napa earlier this year, and I remembered that I really like wine as well, and that I started drinking beer because it was a lot cheaper than wine. But I don't know. A really good wine is. I'm not sure there's much better than that. And then the job I would do is philanthropist a job? Can I just be wealthy and give away money? That if
Some people do it.
Yeah. So if I can qualify that, then that would be my dream job. Just yeah.
Well, all right. Kevin, do you have a dream job? Then maybe you can hit us with the legislative update real quick.
My dream job would be able to follow Congress and all the tax law proposals and changes that they're doing. So the last couple months, and not months, we have talked about the tax law proposals and the various infrastructure bills. Well, there's been excitement, and it's stalled, and there's been excitement, and this past week there's been more excitement, and there's actually been 2 proposals that have come out just within probably the last 48 hours. The first proposal is by Senator Wyden. What he would like to do is enact a new tax on unrealized gains from appreciated property. Unrealized losses would be carried back, but these unrealized gains would be taxed as long-term capital at the long-term capital gains rates. Essentially, if you have stock that's worth $1 million and no basis in it, well, Senator Wyden is proposing that be taxed at the long-term capital gains rates. Now, this would only apply to those taxpayers with $1 billion in assets or $100 million in adjusted gross income for each of the 3 previous tax years. So it's a very narrow base of who would be hit by this tax. With that said, the immediate response within his own party, was skepticism and concerns about setting up such a tax that would target such a narrow focus of the taxpayers. So whether or not that's going to pass, I don't know. I think it has a rough, an uphill battle to climb. So I'm not sure that that's going to go anywhere. That's just a personal opinion. The second proposal was President Biden's. He actually came out this morning and shared with everyone his reworked vision of his initial $3.5 trillion infrastructure bill. And his new reworked bill is coming in at about $1.85 trillion. This was basically due to concerns from Senator Manchin out of West Virginia that he thought $3.5 trillion was too large. The revamped bill proposal includes a few new taxes targeted at larger corporations and millionaires, while reducing at the same time some of the spending that he wanted to initially do on some of the social programs. So some of the highlights, really high-level highlights. He wants to include a 15% corporate minimum tax on corporations with over $1 billion in profits. He wants a 1% tax on stock buybacks from corporations, public traded companies. He also would like to add a 5% additional tax on individuals with income above $10 million, and then an additional 3% on top of that on income above 25 million. So at a potential of an additional 8% on top of the marginal tax rates if you have income in excess of 25 million. One of the things he would like to do in terms of raising revenue is reducing business losses from partnerships and flow-through entities such as S corporations. And then finally, he wants to increase the funding for the IRS enforcement to go after all the tax cheats out there. Again, this just came out today. He's back on the Hill today trying to drum up support, so we can only just wait and see what happens. I think that maybe, from a personal perspective, maybe the new bill that President Biden is proposing could pass. It's a little less aggressive than his initial 3.5 trillion. I really don't think Senator Wyden's bill has much of a leg to stand on from a personal perspective, but we'll just have to wait and see. Just have to see where it turns out.
Yeah, it's really interesting to see Senator Wyden, an Oregon senator, was being the charge of the Senate Finance Committee now, and what power that kind of holds is really fascinating. But the mark-to-market thing, I think, really has some issues. If you raise assets to what they're worth and you tax them right away without having cash to pay the tax, it's kind of an issue. So, but should be fascinating to follow, and we'll keep you guys updated here over the next couple of months as these things pass through. And so I'm going to turn it on over to Trevor, and he is going to take it away from here.
All right, so give me a second here. I'm going to try something a little fancy. So in just a moment here, this should become my PowerPoint presentation. All right, so can everybody see the full screen? Fine? Okay, great, I got a thumbs up. As Brent said, my name is Trevor Campbell. I've been with Kernutt Stokes now for 10 years. It's actually 10 years today, I just realized. So I've been here 10 years. I'm a senior manager. I work mostly in the audit and then also in some internal audit and fraud. I have both my CPA and my CFE. It's unfortunately certified fraud examiner, although I think I wouldn't mind the extraordinaire as a replacement for the E instead. So that's what I'm going to be talking about today is fraud aspects. I told Brent, he asked if I could present on this. I said, well, everybody loves fraud. I mean, not when it's happening to you, but it's always one of the funnest things to talk about. So hopefully I can make this interesting for you. We're going to go through the kind of governing body of the certified fraud examiners is the ACFE, the Association of Certified Fraud Examiners. And they put out a report every 2 years where they survey literally hundreds of thousands of people, thousands of organizations all around the world, and compile all kinds of interesting statistics on fraud and fraud prevention. So we're going to look at some of the more interesting pieces of that. And then we're going to talk about kind of fraud during the time of COVID and what are some things we can do to try to prevent fraud from occurring in all of our organizations. So as I said, all this information comes, or the majority of it comes from this report, which was last completed in 2020. It has some COVID in there, but not it's not up to date through today. So to start off, just talking about what's the cost of fraud to most organizations. This statistic has remained pretty constant for a long time. And basically they estimate that 5% of annual revenues are lost to fraud. That number is easy to kind of gloss over. I think a way to think about that is, what would your organization need to do to increase your revenues by 5%? Usually that's a lot. I think that would be, to think of the effort that you would need to put into marketing and client development and whatever else, sales, to get that top line number up by 5% would take an enormous amount of effort for most organizations. And so to think that you might be losing that through just sort of theft and stuff each year is not insignificant. That number is effectively the median loss per case is about $125,000. Now, there's a tendency, I think, when I see a number like that to think, well, okay, that's a lot, but is it skewed by just one particular? So I put up a poll here. Just answer the first question for now, which is, what do you think? Do you think that that number is skewed and that kind of it's large businesses put up a huge amount, or do you think that small businesses are equally? Does everybody have that poll? I haven't done polling before, so I'm trying it for the first time.
I don't think we can submit it. That's
Oh, you have to.
It won't let us
everything?
answer just one. Yeah.
That's unfortunate. Okay, that's okay. We will. I'll end that. Well, for this one anyway, it's a trick question because the answer is it doesn't really matter. In fact, if anything, you can see from this sort of red box here that actually small organizations might be a little bit higher in what they lose. So, you know, right here we have organizations with less than 100 have, you know, a median loss of 150,000. Those with more than 10,000 have a median loss of 140,000. So those numbers are pretty steady. The biggest difference there is that if you have an organization of more than 10,000 employees, you can probably bear to lose 140,000 more than a small organization with less than 100. So even though the dollars are about the same, it's probably disproportionately felt by small businesses. So, so it actually is that is a meaningful number for most of us that don't work in those 10,000 plus companies, but on the smaller end. I pulled this to look at kind of industry by industry what that is. So that 125 is spread across everybody. I think some of the industries that I know I work with or know people that work in, I've kind of highlighted here to give their median losses. So, you know, construction, 200,000, manufacturing, 198,000. So they're all in that, they're all still in a similar range. You know, they might go up or down, but none of those numbers are really insignificant. And what really kind of stands out is there isn't an organization that's sort of like not susceptible to it, even if the numbers might be a little bit smaller. I pulled this quote out of the report because I thought it was really interesting. I think it's true. Maybe 15 years ago, we all would have been shocked a little bit more by some of these statistics and numbers. I don't really think fraud is all that shocking anymore. I think that we kind of come to recognize it as a sort of continuous issue and that we encounter, and that it's no longer it's now so common that it's no longer remarkable. It's just the scale that is kind of questioned. So let's look at how fraud's committed. Generally, it's these three classifications we talk about: asset misappropriation, corruption, and financial statement fraud. Asset misappropriation is where most of our minds go, I think, when we think of fraud. And that's kind of this traditional stuff of theft of cash, skimming of receivables, maybe payroll schemes, expense reimbursements. The last one here on these over here is this, inventory misuse and maybe misuse of equipment for personal use, things like that. Asset misappropriation is the vast quantity-wise, the highest. It's 86% of cases. It's not the biggest in terms of dollar impact because a lot of those are smaller. Largest dollar is on the financial statement fraud side. Financial statement fraud, we're looking at things like timing differences, fake revenues. That's probably where most of us think right off the bat is, that top line number. And concealed liabilities and expenses. I highlighted here this financial ratios. I wanted to point that out because 20 years ago, revenues was by far the spot that most fraud occurred in financial statements. And what happened as a result of that is, like, for us in the audit industry, we have now very direct and specific requirements to do procedures around revenues and companies put more controls in place around revenues. And revenues has been such a big focus that while that still is a spot where we think fraud occurs a lot, it's actually no longer the highest spot for financial statement fraud. What's taken its place is these financial ratios, things like your bank covenants, numbers like EBITDA, which aren't, part of any sort of traditional accounting, standards, but that is what's being measured. That's what people are using. Revenues is a component often of those, but it's not the only component. And so a lot of these, a lot of the most current financial statement fraud occurs more around how to tweak the numbers that impact these ratios more than just creating top line revenue. The last spot is this corruption. I want to spend a moment on corruption because I know in the trainings I've gone to, and when I think of corruption, the first thing that comes to mind is like, well, that's like a third world problem. That's like, bribes to, government officials in Africa and things like that. And that is true. But I don't think that organizations that we work with are exempt from corruption, because corruption is also things like kickbacks and bid rigging, where someone within an organization is collaborating with someone outside to, say, boost the cost of inventory you're purchasing or a contract you're entering into, awarding, the bid to someone who isn't the best one, but it's someone that they are, friends with, and then splitting in the proceeds in some way. So I don't think, we shouldn't think corruption is just something that's a third world problem that we don't deal with in American, companies. It is something still that we need to be conscientious of, and when we're planning our fraud, approach. Looking at how fraud is committed, I circled these three. So this is from the kind of global report here. This is the heat map there, and kind of showed where the losses are on that vertical column, and then the kind of how risky it is on the horizontal. Check tampering, billing, payroll, none of these stand out as things we're not familiar with. I think what I wanted to highlight there is that for small businesses, I mean, those three are already three of the riskiest and potentially costliest, certainly check tampering and billing. What's interesting is for a small business, those are exponentially higher, right? It's double the billing and payroll ones, and then ×4 for check tampering and payment tampering. So small businesses need to be even more aware of controls around those particular fraud schemes over just organizations as a whole. Let's spend a minute here, because I think this is actually my favorite. This looks really busy, I know. So I'll pause for a moment so we can kind of look at it, because I think this is the best slide I have in terms of what is actually something valuable that you could use within an organization. And that is to say that we talk about fraud, and I know I've been in many fraud trainings, and it sort of becomes something that feels overwhelming. And the approach to trying to prevent it also becomes something where it's like, well, what do we do? You just kind of throw resources at it and hope that some of them work. And in fact, that's not the best plan. Taking a scattershot approach and just hoping that you have covered a wide base is not the most effective way. The most effective way is to try to plan according to your risks. And what this does through these surveys is says, if from these industries, here's where fraud most often is occurring. I highlighted this manufacturing just as an example of something we could look at. So if you work in a manufacturing business or with someone in a manufacturing business, if you spend a lot of, you might spend a lot of effort, and they might spend a lot of money on trying to protect against the theft of cash. That's very tangible. It's something you don't want, protecting cash, protecting, we talked about that, check tampering, or even payroll. But those are not the areas that a manufacturing business is most susceptible to fraud. The areas they're most susceptible to are corruption, that kind of, collaboration with someone outside the organization, and, billing and expense reimbursements, things like that. So when you're focusing your controls and your resources on what you want to try to prevent, using this in particular to say, okay, well, first of all, where are our risks? And you don't have to start from scratch and just try to brainstorm it. You can take some of these resources and say, okay, well, we are, either this type of industry, or we're a mix of these types of industries. So what are the risks we're likely to be encountering? And you can tailor your plan and your take a risk-based approach to how you're going to design controls. Because if you do just control against cash theft and payroll, you're protecting against a very small portion of the frauds that are actually going to impact you. You want to tailor it to those bigger percentages. This next slide here is kind of a partner with this, which says, okay, those are the areas that you're most likely to have fraud. Now, what department within those areas, what departments are most likely to be the perpetrators of that? So, looking here, if you identify corruption in that manufacturing as one of your top frauds that you need to be aware of, well, then that is most likely going to, originate out of, say, like the operations department or, purchasing. And so you're going to look at those departments and put controls into place in those departments to prevent that fraud from occurring. If you're looking at a billing scheme, you're looking at like in accounting and, the admin. If you're looking at this expense reimbursements and financial statement, you're obviously going to be looking at people in management more likely than not who have that kind of control over those areas. So I think a combination of using things like this, where you look at where your risk is and then where it's likely to be coming through, really can help you drill down and target better controls that don't feel like a scatter shot, that feel like something that's very purposeful as you try to keep them from occurring. Now looking at why fraud is committed, this is probably familiar to most of you. It's called the fraud triangle. And there's three kind of components to that. The bottom one is sort of the foundation, they say, and that's the pressure. That's what originates someone to commit fraud in the first place. It's often something like a gambling or drug debts, can't pay bills, could just be desire for more status. That leads then to them looking for an opportunity. Opportunity is the method that allows the crime to be committed. That's not being reviewed, access to certain check stock or cash, ability to set up and remit payments to vendors. Doing one is good, doing both leads to an opportunity to send yourself money. The last one is rationalization, and that's how the crime is justified. You would think the crime is justified by the pressure, but usually the pressure is something that makes someone feel guilty. And so the justification becomes what they use to make it feel okay. Like, I don't get paid enough anyway. They're not going to miss it. Nobody, they blow money all the time. So why shouldn't I get to charge a little bit extra when I'm on a work trip? That's the rationalization. As a business, you can mainly affect the opportunity. You can affect the pressure a little bit through like employee programs, help to design, if they have issues, they have someone to talk to, or, trying to be preventative in that way. But the main thing you're going to be trying to focus on is the opportunity. The interesting thing in rationalization is if you talk to people who, try to do, get confessional interviews and stuff, they use rationalization as a way to get the confession, because people will never admit to the pressure. If you feel bad about the fact that you have have a drug problem, you're never going to admit that. You will admit that your family needed the money. So often the rationalization is their get out. That's how they feel okay about it at the end, and allows them to admit guilt without feeling bad. So, but opportunity is what businesses have the most impact on. And what creates that opportunity? The main thing is lack of internal controls. And this is even more common in small businesses. So lack of internal controls is 30% of the fraud weaknesses. Next is override of existing controls. After that, we have the lack of management review, and then the poor tone at the top. You add those together, you're well over 75% of those four things of what causes someone to commit fraud, with that internal control component being the most. And again, we'll go a little further into that in a second, but again, addressing those controls doesn't have to be a scatter shot. It's not just throwing money at it and hoping it makes it work. You target your resources in the spots that are going to be most effective. I tell organizations, like, you could spend every single dollar of your net income on trying to create a perfect control system that'll never allow you to lose a penny. But that's not an effective use of resources. There's always going to be a balance between how much you spend and the control that you're trying to provide, and there's always going to be a risk, that you're trying to balance there. So it's really important that you put that money in the right spot to address the right risk. Okay, so my next fraud or my next poll question was going to be, what are your organization's most common fraud prevention controls? I'll just list off a few, and you can just kind of think about them. We won't get to see everybody's responses as a group, but here's some of the most common ones, and you think in your mind whether or not you think this applies to your organization. So an external audit of financial statements. Next is a written code of conduct, an internal audit department or some sort of internal audit, management review of both kind of documents and financial statements, a hotline, an anti-fraud policy, fraud training for employees and management, and then I don't know, if you have no clue what your organization has, you could have offered I don't know. So those are some. Let's take a look here at what is most common. So on my one side in figure 9, we have how is fraud detected. In figure 21, we have what are the controls most common in place. So I didn't list them all, as you can tell, but the number one control that most organizations have in place that they think is a fraud prevention technique is this external audit of financial statements, followed by code of conduct, and then kind of so on down the line. Kind of in the middle there, we have the hotline. Down 56% have an anti-fraud policy, and 55% have some training, and so on. So those are some of the controls. Now let's look at this. So the top control that organizations think is part of their fraud prevention is the audit of financial statements. And that, if that is your only control, then you are going to detect about 4% of the frauds that you encounter. Now, there's a lot of reasons why that it is. As an auditor, I can make give you a lot of reasons. The main one being that audits of financial statements aren't designed to find fraud. They're designed to be aware that it could occur, and if they find it, you're going to hear about it. But I'll give you a quick example. Just imagine you work in a retail organization and someone steals cash from the till. They sell something and they take the cash, and instead of putting it in the till, they put it in their pocket. At the end of the day, that till is going to be short. And how is that going to be captured? That's going to be captured through some kind of reconciliation. It's going to be probably written off through inventory, because someday you're going to do a count and find out that you don't have as many cans of soup as you thought. And so, it's going to be written off as cost of goods sold. But in the long run, that theft is going to be recorded as an expense. Now, it might not be classified exactly right, but the bottom line is not going to be wrong. So if you're auditing those financial statements are fairly stated because the expense is captured. Now, that doesn't mean the theft didn't occur. It just means that the audit is not going to find theft of cash from a till, because it can't. As long as the expense is there, that's what's going to be important, that the financial picture is correct. So that in of itself is not a good fraud prevention. The number one way that fraud is detected is through tips. And so in these green arrows, how do tips come in? Tips come through things like hotlines. They come from employees understanding what fraud is so that they can be aware and report it. They come through things like rewards for whistleblowers. Those are way further down the line for most organizations in the things that they have provided as a resource to stop fraud from occurring. And yet it's the top thing that leads to the detection of fraud. The other thing that's interesting about those is those are a lot less expensive than some of the things that are even further up on the list. So that's another thing I want to stress, is that you don't always have to spend the most to get the most protection, back to that risk-based kind of approach. So your number one source of tips is going to be employees. So partnering with your employees, I think there's a tendency when we think about fraud in some ways to think that the employees of the organization are the enemy, that they're the ones that are going to be trying to rip us off, and maybe that's partly true. but they're also your best defense. And partnering with employees is the best way that you're going to lead to those tips. And so things like creating that code of conduct, creating an anti-fraud policy, providing them training and employee support programs, and even rewarding them for things like bringing up whistleblower, those are all not expensive and highly effective ways. So that kind of education, informing employees, asking them to be part of your fraud prevention program is like an empowering thing to do. And it's really the most effective thing as well. Below employees, obviously we've got customers, vendors, and some anonymous. And so, you know, who knows what percentage that is, but more 50% comes from internally, people that know what's going on and just need a reason and a means to report it. I'll tell you from on financial statements, part of our requirement is that we do have to ask about fraud when we're auditing financial statements. And the reason that that is a professional requirement is that when people used to get asked, would report a fraud that they knew was occurring, it would get discovered, and then someone would say, well, I knew about that. And whenever they would get asked, well, why didn't you say anything? The most common answer was, well, nobody ever asked me. And so as an auditor now, we have a professional requirement that we have to ask, do you know about fraud? Because we're taking away that was the reason many people don't speak up, is they simply were never asked. So partnering is really important. I want to mention that hotline again. I think that we tend to think that hotlines are just something that big organizations should have. They don't have to be really costly. I did a little bit of looking. You can find software that is as little as $45 a month, maybe even less. That's what I could find. But you know, you're talking about potentially really major fraud prevention, and for $45 a month, that's a really small investment. That's a couple of hours of somebody's time in terms of payroll. You know, a few things, if you do have a hotline or think about getting one, it's got to be encouraged by management and communicated. It has to be anonymous and confidential. You want to publicize it and train it. It won't be effective if nobody knows it's there. In terms of accessibility, the best advice is it should be one click, meaning you shouldn't have to search really hard to find the hotline. Within your internal network, it should be like, you know, within one click, you should be well directed to where you need to report something. Preferably, it's available internally and externally in some way. You saw that, you know, a big chunk of the reporting came from these customers, vendors, anonymous. So, you know, if you have something that you can get external reporting, then you can capture those tips as well. And then it should allow for two-way communication. It's really important that there be some kind of follow through. Now, that's not to say that you should say, you don't need to, you'll never tell what the outcome of a report is. You won't say, you know, like, you don't have to tell them the details. What you do want to say is, thank you for providing this, we're looking into it, and provide some kind of feedback for when that is closed, even though you're not going to give the details. Again, you're trying to develop like a partnership relationship there. Another thing I want to point out is, yes, if you have a hotline, you will get some petty and annoying reports. You will find out that somebody parked in the wrong spot. You'll find out that, you know, somebody's hogging the snacks, that they took 2 burritos from the freezer and they're only supposed to take 1. And that's going to happen. The thing to know is that's okay. In fact, that's good, because if you're getting petty reports, you're going to get important reports too. If they're using it for those little things, you can be sure they're going to use it for something big. And so that's just, it's going to be a part of it, and you're going to just accept that because it's part of showing that they know it's accessible, they know how to utilize it, they trust that they can utilize it. And so even those petty reports are valuable in knowing that it's an effective tool that you're paying for. I wanted to highlight these. Look over here with me. This is showing when a control is in place, how much does that save on a potential fraud? So at the top of the list here is this code of conduct. When a code of conduct is in place, it reduced the fraud from 205,000 to 100,000. So that's a 51% reduction. A code of conduct is not something that's hard and expensive to create. So just creating that, having that in place, having a culture that people think that your organization is focused on fraud prevention and has a code of conduct is the most valuable thing in terms of preventing losses. Some of the other ones that we talked about, the hotline there, again, a $98,000 savings from 198 to 100. You can pay a lot of $45 a month fees for $98,000 if you can prevent one significant fraud through having a hotline. And then the anti-fraud policy. I highlighted these specifically because they're not expensive. And so creating these things, each one of them has a major impact. There's some other ones here too, an internal audit department. You could probably pay for an internal audit department if you prevented a fraud with that $100,000 potential savings, but that's going to be much more expensive than simply creating an anti-fraud policy and doing some education. So that's why I highlighted those to point out. I wanted to touch on this. I think sometimes we think, well, I don't really think there's fraud. I don't want to spend a lot of time and money on it, but if there is any, then we'll just, we'll go after it hard in prosecution, and that'll be part of, we'll show that we're not going to tolerate it if it ever happens. I just want to say that that's not an effective technique to kind of keep fraud from occurring. For one, it's going to be expensive. Most organizations don't recover any money from a fraud loss. They typically, if they do, they recover 25% or less. So if you think that median fraud is 125,000, most aren't getting a single penny back, and if they do, they're getting a very small portion. Additionally, many of these are never even going to go to trial, whether it's civil or criminal. And within those numbers, if you spend time looking at that, you'll see, well, some of them do go to trial, but then the ones that actually get convicted, the number just gets kind of narrower and narrower. Doesn't lead to a super positive picture. So why is this true? Why is it that many don't go to trial and most don't recover much? Well, there's a lot of reasons, but some of the main ones here are, this fear of bad publicity. It's expensive to sue someone. It's hard to gather evidence and also expensive to gather evidence. You pretty quickly can think you think, well, we would just sue them, but for most of the time, that's going to end up something that becomes public knowledge if you're especially if it's a criminal trial or something and significant. And that is embarrassing to most organizations. And in some cases, not just embarrassing, potentially damaging. What you think about, what kind of loss of trust from your customers would potentially be more costly than just the fraud that you encountered. And depending on the industry, it's often simply a business decision to say, we'd rather keep this private and move on than pursue it, because the damage of the public knowledge could be worse than the damage we've already had. The other thing here at the bottom is that for-profit businesses, it's really difficult to get prosecution, to get a district attorney interested in pursuing a fraud case. Most courts are very backed up, and they're backed up with lots of cases that are more significant than a for-profit company that just didn't manage their business well. So, not-for-profits, the threshold's way lower. Everybody's very interested in not-for-profits fraud. So the threshold for them is lower, but for a for-profit business, if you're not in the multiple hundreds of thousands of dollars in terms of loss, you're probably just not even going to have a district attorney that's willing or interested in taking that case. And so you might just be dead in the water before you even start. So all the more reason to work on prevention versus prosecution as a effort. So my next poll question was, has your organization experienced an increase since the start of COVID? So we're turning our attention a little more to the current moment here. I'm going to go here to the results of the survey. So on figure 1 is the amount of fraud uncovered. So you can see there from the the green and the purple bars, 51% of businesses did in fact experience an increase. 36% was about the same, and then a small amount were actually less somehow. I wonder if they were less simply because the people committing the fraud became unemployed. There's no reason given there, but you have to wonder what drives a significantly less fraud during that time. In most cases, on figure 2, the awareness of fraud was increased. If fraud is increasing, the awareness is going to increase automatically. But the good thing there is that people became more aware as time went on, it seems, as well. So most organizations are dealing with an increase in this right now. I want to spend a few minutes talking about some specifics about this time. So why would COVID cause that? Well, any kind of disruption to our norm, to our habits, to our, to where we're working, our personal lives, it just causes stress. We're all, on this call, I can see many of us are not in our offices at our jobs. I am in my home, in my bedroom. Any moment now, my kids can come screaming and barge down the door, and, and I'm going to be distracted. And when you're distracted, you make mistakes. And unfortunately, that is the exact time that people that commit fraud are looking for. They're looking for distracted people outside of their norm to make mistakes. And so we've seen a lot of increases in things like cyber fraud, payment fraud, vendor seller fraud, and we'll focus on a couple of those. So again, this was going to be a fun one. We were going to see all of the frauds that you think your organization has had, but we'll just have to imagine. I am guessing that some of these would surprise us, that the number of boxes that I think a lot more organizations end up having ransomware attacks than ever become known. Those are things that you usually keep private. We're all very familiar with things like email phishing, wire transfers, things like all of this stuff, again, has just become even exponentially higher in the last 20 months as people are kind of trying to work through all kinds of stress and not thinking as clearly and not in their normal habits. So what do we do to fight those? I'll just talk about a few of these here. So first, just having an expectation that that your business is susceptible to fraud is step number one. And we have a saying in audit, which is trust but verify, which is we don't think somebody's not telling the truth, but we also want to see the evidence for it, right? That's basically what the job is. And I think that's just a good kind of mindset to have when it comes to fraud. You don't think people are committing fraud in your organization, but you're also going to do what you can to make sure it's not happening. Something as simple as reviewing bank statements is frequently cited by people that have committed fraud in the past, saying, what are the things that would have stopped you? And something as simple as saying, if the owner just looked at their bank statements, they would have known. I would have had to stop because they would have seen that it's all right there, the money leaving, and they would have known. And so some things are very simple like that. Investing, like we said, it's not always really expensive, but creating that code of conduct, less than half of small businesses have it. A key thing on that code of conduct is it should be short. If you're creating a 10-page document, nobody's ever going to look at it or read it or use it. It needs to be short, it needs to be concise, it needs to be easy to understand and easily accessible. Staffing and creating segregation of duties, that's one that's often hard for small businesses. As much as possible, you put in the things you can, and then you work around your restrictions in terms of staffing costs to build out other controls to supplement when you can't have full segregation of duties. Training and cross-training, telling staff what to look for. Again, it's getting them to partner with you. Insurance is not a preventative measure, but it can definitely protect against catastrophic loss. So I would advise anybody, if you don't know if you have fraud insurance for your organization to protect against employee theft, I would talk to your insurance agent at the start of next week and say, do we have it? And if not, what would something like that cost? In many cases, that is the only way that you're going to recover money if you do end up getting a fraud committed against you. And then some outside sources, bring in consulting, do a fraud risk assessment, or get a hotline. Lastly here, empower, setting the tone, encouraging employees, and not appearing bothered. The main reason why people say that they, if they get that email that says, hey, send $50,000, I need it right away, I lost my wallet and I'm traveling, and the main reason why people do that is they're more afraid of being yelled at by their boss if they were to ask a question. They're more afraid that their boss would say, don't ask me questions, just do what you're told, than they are of actually sending the money. So if that's the culture you've created, where it's a don't ask me questions, don't bother me, just do what I say and do it quickly, then you're opening yourself up. You need to encourage people to feel comfortable reporting and asking questions if they aren't comfortable, if they feel like there might be something fishy or a fraud occurring. And that's all about a culture that management and owners have to set. In business email compromise, so we just said, like, you know, the CEO asking for an employee to send money. Some of those are obvious and some of them are very convincing. I got an email last week. It said one of my email accounts had been compromised and that I needed to change something. It looked very legitimate. It looked exactly like others I've gotten in the past. The only thing that was out of place on there was that instead of Microsoft, it was Microsoft. So, you know, I was like, I don't think Microsoft, that I have an email account with them. So, you know, they can be very convincing. You need to be very, you know, you have to be suspicious. How do you stop it? First, check things like the spelling. If it's trying to create a sense of urgency for you, that's a huge red flag. If you feel urgent or rushed, you know, then you should probably pause before you do anything. If you're receiving a file that you're not expecting, hey, here's this invoice, and you're like, I don't know who this is, then don't click on it. Those things, if you feel that tinge, don't do anything. Take a moment and think about whether or not you need to forward that on. But they can be very convincing, and so it's not that easy. How often do you receive phishing emails? I feel like for me, it's daily. And that's probably after our IT has, you know, has filtered out the vast majority that even could come through. It's certainly weekly, if not more frequently than that. And I suspect that many of you feel the same way. Here's a few specific schemes that were done through email compromise situations. This one's my favorite. It has a name. It's called Ancient Tortoise, apparently. I think this one's really clever. So they somehow or other, they find a way to get access to an AR aging. Then they take that aging and they email your customers and ask them to pay their past due accounts and set up a new bank account for it to go to. So they're asking people that owe money to pay the amount that they are owed, and simply that they know is past due or close to past due. So they're already prepared to, like, for that question to come, and they simply change the routing for where it goes to. And, you know, an AR aging is not something that is as highly protected as many other organizational documents. I mean, it's not something you would just give to anybody, but you could see that slipping out much easier than some other information within the organization. So I thought that one is pretty clever. Again, another reason why, if you have an external hotline, maybe that would become, you might be notified of that if you had a vendor or a customer could notify you through that. A couple other HR related ones where, you know, HR might receive a request from an employee to update the direct deposit information, or from the CEO to get an employee's payroll or tax data for some reason, but those are coming through a compromised email, and suddenly they've got a way to steal identity and things like that. Oh yeah, good. So how do we prevent that? One is through employee education. You should have mandatory training, probably with touches more frequently than even once a year. You can use things like organizations that send out purposely fraudulent emails to have people click on them and then be notified. Our organization does that. We sometimes get those, and if you click on them, you are immediately directed to a training site that says, you clicked on a fake email, do this training to learn what to look for next time. I think the important thing on that, again, is the culture, which is you have to expect that people are going to make mistakes, and you don't want them to feel guilty when they do. If someone clicks on an email that they shouldn't have clicked on, you want them to feel comfortable letting you know that that happened. And you know, it's kind of like, I've got kids that if I want them to tell me the truth, then I can't be too angry when they do. You got to balance that, you know, the learning aspect between what you're trying. They take the long view, and you know, if they clicked on it, they clicked on it. All you can do is move forward and try to help them realize that you want their partnership in preventing that in the future. Other things, two-step verification, making sure you have a phone number to call. The thing about phone numbers is it needs to be a trusted phone number that's not in the email you received. If you got an email with a phone number in it, that phone number is going to go to somebody that is going to tell you everything that you want to hear to make the fraud happen. You want to call somebody from a known number that you know that is not part of the email that you got. And then protecting sensitive information. This is things like, don't put your email addresses and stuff on the company's website. Those are just open for people farming for that kind of stuff to push out more of those things. If you have things where they can get access to vacation schedules, job duties, org charts, it's all part of how they can kind of create a better email and a better presentation to make it look more legitimate that might lead to further fraud. So protecting your information on those things is important too. I'm going to go pretty quickly through these last kind of couple of things, just a few other cybersecurity kind of best practices. Create specific policies, kind of like that code of conduct and anti-fraud plan, have policies in place. Jump down here with me to the third bullet. Keep your software patched and updated. The vast majority of cyber frauds could be prevented if people just ran the updates. The updates mostly exist because there's known gaps and problems in the software, and if you update, they go away. And so, you know, keeping your software patched, keeping your antivirus and firewall softwares up to date is huge in preventing cyber attacks. It's kind of like having a car alarm. It doesn't mean that somebody can't smash your window. It just isn't worth the effort when they can smash the window of someone else's car that doesn't have the alarm. And so the same way, you know, it's not like they can't break in, but you just aren't going to be the low-hanging fruit. They're going to go to another organization that's much easier. And so that's why this kind of thing is so important. You know, physical controls are part of cybersecurity. You know, ID cards, offsite backups, logging visitors. And then there's the logical controls, multi-factor authentication, required password changes. All these things that we find really annoying are also annoying to people that commit fraud. And so, you know, even though you're like, gosh, I hate changing my password every 90 days. Well, someone trying to commit fraud hates trying to guess your password every 90 days too. Again, they're just going to move on to someone else that's easier. That employee training, again, if you don't have a mobile device management policy in place, that's something that you should probably be thinking about. And then at the bottom here, you can consider a cybersecurity audit. There's organizations that do that you can, you know, if you really aren't sure where you're most susceptible in these areas, you can bring in and then really target them from a result of those audits. So just to kind of wrap up here, these 5 points kind of capture the majority of what I talked about, which is 1, know your risks. Don't take a scattershot approach. Try to identify your risks and be specific. Plan your response based on those risks. Put your resources where they're most effective. Set the tone at the organization that says we're an organization that is committed to trying to prevent fraud, and we're all going to partner together to do that. Engage your employees, make them feel empowered as part of that team, and then be proactive. Don't wait for it to happen and say, we'll figure it out later. It's going to cost more to do that than it is to start putting some of these things in place, even if they're just those low-hanging fruit, low-dollar things. So, you know, here at the very top here, enhanced fraud risk awareness across the organization is the best thing that you can do to lead towards kind of creating a better anti-fraud program. So that is what I have. If you guys have any questions, I'm happy to answer them.
Well, Trevor, I thought that was awesome. I'll give people here a couple seconds just in case they have any questions, but I thought that was great information. Great job.
if anybody, if you find yourself thinking later and you're like, what was some of those things, or that was a cool chart, I wish I'd, taken a screenshot of it or something, feel free to reach out to any of us, anybody you know at Kernutt Stokes, and ask, hey, can I get some of that, one of those things? I'm happy to send it on. So even if you don't think of it now, it's not your last chance to ask a question if you have one.
All right. Well, thanks everybody for coming, and we'll see you next month. It'll be on the 18th, I believe it's the third Thursday. We're going to do not do the fourth Thursday of the month because that would be Thanksgiving. And we're going to be talking about choice of entity and kind of the way your entity can affect your taxes. So, all right. Well, thanks everybody for coming.